Day by day, it's getting harder to distinguish what's a meme stock and what's a real stock. Looking at the charts and performing what's universally known as a male star sign, we get the answer of fuck you. Nowhere can you make money in the shit pool known as the S&P 500 or the Dow Jones. Both supposedly reliable money pools that should net you money on autopilot. But like Tesla, the autopilot must fail, eventually, and before it crashes, it turns itself off to avoid legal liabilities. Just a couple of years ago, low interest rates and Powell's strong right arm used to continuously jack the hammer of money printing and left all of the big brain Warren Buffett investors holding a bag of GameStop stock, waiting and praying for a turnaround. And unlike your boomer cousin that bought a house for the price of a rug and tug at a Taco Bell, you have to pay your left kidney plus a bonus testicle sack to be able to afford the down payment. The question remains, how do you make money at the stock market? With the very known exception of fraud, you can do time in the market. And to be clear, this isn't financial advice in any way, shape or form, because if you do take financial advice from me, a YouTube channel with one video uploaded using quick editing in DaVinci Resolve and my neighbor's Wi-Fi that I'm stealing right now, you should probably lose money. But to be honest, you might lose less than what you do now. And in full disclosure, I've lost it all. I'm a part of the Portfolio Gone gang. You know the thing that everyone talks about when the market is taking a nosedive and they suddenly pretend they saw it coming? The VIX. That's what professional traders call their security blanket when everything is burning down. You can buy those fancy VIX ETPs like VXX or UVXY or Xbox 360 or whatever buttons are on the new PS5 controller. I don't know, I can't afford that. But let's be real, if you're watching this video, you're probably gonna hold them way too long and absolutely get wrecked by contango. That's when future prices are higher than spot prices, which means that the products that you buy bleed value like you after a paper cut on pretty much anything. What these YouTube finance bros won't tell you is that the VIX itself is calculated using the implied volatility of S&P 500 options contracts, specifically those expiring between 23 and 37 days out. It's literally designed as a 30-day forward-looking volatility expectation. So when you buy UVXY, thinking you're so clever, you're actually buying second month VIX futures that will roll over to front month futures daily. And that's why you're going to lose 80% of your investment in a year when volatility stays flat. But, you know, looking at today's economy, it might not be that bad to buy VXX call options or even just buy VIX. You could also try VIX call options if you think volatility is about to explode. At least that way your stupidity has a defined cost, the premium you paid. Pro tip, VIX options actually expire on Wednesdays, not Fridays like normal options, because the market apparently needed one more way to confuse retail investors, and they're European style, which means that there's no early exercise privileges. What about raw materials? Because apparently buying digital tokens wasn't speculative enough for you. I got a question. You seriously think you're going to be able to hold an eye on the entire world's economy and maintain rigorous due diligence on what happens to excavation, production, and manufacturing all around the world to be able to spot discrepancies in both the spot and future prices of commodities and raw materials? If your answer is still yes, then good, you belong on this video. Welcome to Portfolio Gone. Two raw materials, copper and lithium, are hot because all of those EVs nobody can afford. What your investment advisor won't mention is that copper has a 0.81 correlation to global PMI numbers, which means that when manufacturing slows down, your copper investment gets absolutely hammered. But, you know, sure, keep telling yourself you're investing into the future or you're doing a big brain move or W investment, whatever people say these days. Gold works great if you're convinced the apocalypse is coming and somehow believe jewelry metal will save you. Real traders know gold actually has a negative 0.25 correlation to the real interest rates, meaning when the Fed keeps hiking these rates, your shiny metal investment becomes what is about as valuable as your dating profile. The gold-silver ratio historically hovers around 60-1, and when it spikes above 80-1 like it did last year, silver will typically outperform until equilibrium returns. But you're just probably gonna buy gold and call it a day. However, even then, looking at the current correlation between gold and real interest rates, we find that whatever I said before means jack shit, as gold has exploded in recent times and real interest rates has done the same. So who knows what's gonna happen. Oil is always fun if you enjoy having your portfolio hijacked by some random OPEC announcement or pipeline explosion halfway across the world. WTI and Brent crude typically trade at a spread of $3 to $5 per barrel, but during supply disruptions, that can spread and blow out to 20 plus, which is exactly when amateurs rush in to buy the dip and get obliterated by backwardation in the futures curve. The key is timing, which you will get wrong. My only tip there is buy commodities when nobody wants them. That takes patience, and you clearly don't have that, so I don't know why you're still watching. Did you know that Bloomberg Commodity Index has underperformed the S&P 500 by about 200% over the past decade? But sure, this time will be different for you. But look, the honest truth about commodities is they're cyclical as hell. They'll make you feel like a genius for about 3 months and then spend 3 years making you question every financial decision you've ever made. Kind of that relationship you had in college. And at the end of the day, you're probably better off taking whatever money you were going to put in the market and spending it on something you actually want, something that'll actually bring you some joy. Because let's face it, you're not beating the system. The system is designed to beat you since before you were born.